Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you as well. And markets, yes, off the day's highest point, but seems like in that range of 21,600 and around those levels.
Rightly said, actually, Vinny. A very good afternoon to you. If you look at the markets, definitely we are seeing a range-bound trading session right now after we've actually dipped from the day's highest point. We are actually holding fort around that 21,600 mark. When it comes to the Nifty, let's talk about what's happening with the Nifty Bank, because that one is almost on the verge of erasing all of its gains. As you can see it on your screen at the day's lowest point coming into the Nifty Bank. Let's take a look at some of the banking counters, especially IndusInd Bank. That one has taken a knock from the day's highest point right now. And that's the only one. Actually, if you look at the list of losers, there are only a handful of losers in trade today, but most of them are only the banking counters, like IndusInd Bank, that's trading lower by about 3.5%. You have Kotak Mahindra Bank, that's seeing a downtick of as much as 1.2%. HDFC Bank is the other set of losers in trade today. So that's the way how the markets are looking like at this point in time. You see the banks have actually reduced or rather kind of resumed their weakness once again, Vinny.
Absolutely, that's how markets are set up right now as well. But Cheryl, budget is around the corner. Let's get an outlook coming in from one of the FMCG players, especially rural, has been subdued as well. So, what is the industry expecting as well? We're joined by Asif Malabari, CFO at GCPL this afternoon to talk about the budget expectations and outlook from this budget as well. And Asif, thank you so much for joining in with us this afternoon on ET Now. And let's talk about rural, right? Obviously, most FMCG players have around a 35 to 40% in terms of their revenues that come in from rural, which has not seen a recovery. So, in terms of stimulus that we could be expecting, or what is the industry requiring from this budget in terms of to provide a stimulus for the rural recovery from the budget?
So, to me, there is an opportunity to look at really the indirect taxes on everyday products, because these are consumed by the entire nation, and looking at indirect taxation rates on everyday use products and bringing some of those rates down can result in a boost to the consumption of the economy in rural and in general.
Hi, good afternoon. This is Cheryl also joining in, Asif. And let's talk about any policy push that you're expecting, especially when it comes to actually seeing an uptick in discretionary demand or so, thrust towards that sort of a segment.
So, in terms of the overall expectation from the budget, there has been a lot of boost to the investment side of the economy through various schemes, Make in India, through the PLI schemes, etc. It's important that the budget focuses also on the consumption side and gives a boost to the consumption side, so that it is a more resilient and an inclusive growth story over the next couple of years, which we can see. Specifically on the rural end, it's important that the budget looks at the job creation in rural, so that the consumption economy in the rural sees a much improved fillip.
Absolutely, that's in terms of the overall expectations also that are coming in, but also in terms of specifically, we also want to understand in terms of discretionary front, any expectations that one could expect there as well, other than the overall expectations.
So I think there is no specific demand in terms of which really the FMCG industry currently has kind of seeking. I think one or two actions which would be nice to kind of see would be the journey to streamline the compliance processes, the journey to streamline and reduce the cost of doing business, because this can free up resources for the larger industry in general. And I think it would be good to kind of see that come through. I think in terms of additional pieces which could help the larger industry in general, actions which can propel investments in terms of either relief from an income tax point of view or from an indirect tax point of view to propel capex investment for the industry would also be a welcome step.
Okay, thank you so much, Asif, for joining in with us to talk to us about the budget expectations from the industry-wise, as well as what is required in terms of a stimulus for rural recovery as well. But with that, let's get started with those individual movers in trade, either on the back of news flows or on the back of technicals. And on the technicals, we're joined by Swati Hotkar from Nirmal Securities, while from the research team we have Lisa as well as Ashesha joining in with us. A very good afternoon to all three of you all as well. And let me start with the first stock that we're going to talk about today, that is Deepak Nitrite. Now we have MK that has initiated coverage on Deepak Nitrite. They've given an ad rating, target price of 2,600 rupees per share. What they are saying is phenol acetone downstream is to be the key growth driver for the company, and overall phenol acetone downstream is to be a large import substitution opportunity where they see, and that could be a driver because of this import substitution opportunity which other company has. And that strong pipeline of capex offers a long runway for growth for the company, and margin accretive expansion is something that will be aiding the earnings growth going forward, as well as the return ratio. So that's why they're quite positive on the stock. 2,600 is the target price. As of now, the stock is trading with an uptick of 2.5% approximately.
All right, let's shift focus to the pharma pack then. Glenmark Life is trading at a 2.5-year high in today's trading session. If you look at the stock, it actually has hit its highest level since August 2021. The company has said that it has signed a deal to manufacture and supply API for Japanese innovator pharma company, and this estimated commercial value of the project is approximately $5 million. On back of this particular supply deal that they've inked with a Japanese company, the stock is trading higher, now trading higher by about 3% or so.
Okay, let's move on and shift gears to the auto pack then. And Swati, Mahindra and Mahindra today surely trading with gains of almost 2%. Last 6 months managed to see just 7% return. In this range of 1,500 to 1,600, what's the view now on M&M?
We have seen overall the profit booking in this stock from 1750 to almost 1580 levels. In this kind of a correction, the stock manages to take a support of 50 and 100 DMA. And today's opening was very strong opening. The open and low is almost same, and I believe this pullback rally is likely to be continued towards the 1740 to 1750 levels. So upside momentum can be seen. Downside, the support as of now currently lies at 1620. So those who are interested to take a long position, they can take it at the CMP as well as, or hold their long positions by keeping a trading stop loss of 1620. I believe this rally is likely to be extended towards to 1750 levels on the high side.
Okay, that's the view coming in on M&M. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after the break.
Welcome back. You're watching Market Fatafat on ET now, and let's talk about IndusInd Bank, Lisa. And this one is actually sulking in trade, now become the top loser on the Nifty.
Yes, so that's because of the results that they have declared. The standalone GNPA that was stable at around 1.92%, NII and PAT that was up around 17.5%. But what stood out as a sore thumb was the slippages or the bad loan, because the fresh slippages that rose around 20.5% on a sequential basis to rupees 1700 crore, and the elevated slippages was mainly because of the corporate as well as vehicle finance books. However, the management guided that they will be normalizing it to 1200 crore going forward. Now, even analysts, even they highlighted the slippages as an issue, and they said that that remains a key concern for the quarter. In fact, Morgan Stanley has trimmed the EPS by around 0.5% for FY24 and 1% for FY25. So that is why we can see IndusInd slipping in today's trade on the back of the higher slippages issue that arose in the Q3 results. It's down around 3.4% as we speak.
Okay, let's move on, talk about IGL on the charts then. And Swati, this one seems like has seen a bit of a correction around November, and since then has been subdued. But now on the charts, do you see a pickup coming in?
Yes, rightly from you have pointed out that we have seen some uptick rally from almost 400 to 444 levels. If you look towards the last few trading session, at least 1 or 2 month session, we have seen that the stock has given a formation of a support of around 370 to 380 levels, and from there onwards we have seen a turnaround. Now, as of now, this particular counter is facing a resistance of 200 DMA, which comes to at around 445, 450 levels, that is the 200 DMA. If it's clear that level as a strong resistance level, then the pullback rally is likely to be continued towards to now 490 to 500 levels. I believe the view is definitely positive and preempting the breakout in this particular stock, whereas on a downside the support lies at 430. So those who are holding any long positions, they can maintain the long positions by keeping a trading stop loss for 430. For the immediate target would be a 480 to 490.
Keeping an eye out on those levels for IGL. Let's move on, talk about AVP Industries buzzing away in trade today after MK has initiated coverage with a buy rating, target price of 750 rupees per share. As of now, you can see the stock is up almost 9% to trade. Now, what MKs are highlighting about the company is that they said that this is the best play in terms on demand recovery in the chemical space, as well as the MMA and MEA is expected to grow significantly for the company. Let's not forget, AVP Industries is witnessing benefits from Europe Plus One in its value chain as well, and India has become more competitive in this nitration as well, which supports AVP Industries. That is why a sharp uptick that we're seeing today in the stock. MK, a buy rating, target price of 750 rupees per share is what its initiated coverage on AVP Industries.
Alright, let's shift focus to EMS Limited. Remember, this is a recently listed counter. It's in the water supply solutions company, and it saw an uptick of as much as 5% earlier on in the trading session, and now it's up about 3%. The company said it is the lowest bidder in the tender at Vikas Nagar, Dehradun, with an estimated order value of around 479 crore rupees. If you look at the stock price, it's on track for a second consecutive day of gains, and it had hit an upper circuit last time as well in December when it bagged an order. Today also it hit an upper circuit. Now it is actually moved a tad bit lower from those levels. Now it's trading higher by about 3%. That's EMS Limited for you.
Moving on and talking about Indus Towers on the charts and technical front. Swati, this one has seen a 30% uptick in the last 6 months. Where do you see this headed, and what's the target that one should keep here?
See, the overall view is definitely positive on this particular stock. If you look towards the weekly or the monthly chart shows that the stock has given the breakout of the inverse head and shoulder pattern, and the breakout level was coming at around 195 to 200 levels. Once it manages to give the breakout, I believe that this rally is likely to be extended towards minimum to 250 to 260 levels on the higher sides. So the overall setup on the technical part is really positive on the Indus Tower. Those who are holding any long positions, they can carry for immediate target of 250, whereas on the downside, the immediate support lies at 200. So as long as this particular stocks hold to 200 levels on the closing basis, the view will definitely remains positive for immediate target of 260 to 270.
Alright, moving on, Ashesha, let's shift focus to a sector that you track very closely. Among the first nifty companies that's out for today, there's Ultratech. How are the numbers?
Well, yes, better than expected set of numbers. Remember, realizations have also risen by as much as 2% on a quarter-on-quarter basis, and that is because cement prices rose nearly 3% sequentially. So the internals also look very strong. EBITDA per ton has seen a solid growth of about 25% on a sequential basis, and that is on account of lower raw material costs. In fact, the company also said that energy costs have declined by about 5% on a quarter-on-quarter basis, and that is what has aided spreads for the company this quarter. They've also spoken about their capacity expansion plans. Remember, Ultratech aims to increase capacity to about 200 MTPA by FY30, and in the near term, they say that company's grey cement capacity will increase to about 157.4 MTPA by FY25. Apart from this, management commentary is also quite positive. They say given government's focus on infrastructure growth and consequent rising demand for urban housing, demand for cement is expected to sustain in the near to medium term. So yes, good set of numbers, better than expected. Commentary is also very good, and expansion plans have also come in.
Okay. Let's move on to stock number 10 for today, and Lisa, Metro Brands. This one is clearly down and out in trade, sulking in trade, down 4% after its numbers. What are the numbers looking like?
Right, so the revenue that was up around 6% on year-on-year basis, but net profit that saw a slowdown. It was down around 13% on year-on-year basis and stood at 97.8 crores. Even the margin that also was down around 300 bips. It stood at 31% versus 34% what was seen last year. So on that basis, Metro brand is sulking in trade. It's down around 4%.
Alright, that's Metro Brands for you. That is sulking in trade, 4% down. Take on that particular counter. But on that note, we slip into a break at this edition of Market Fatafat. But as the World Economic Forum 2024 reaches its culmination, Times Network is bringing you an exclusive interview with Dr. Shyam Bisen, who is the head of Center for Health and member of the Executive Committee at the World Economic Forum, with Mihir Bhatt, who is the Managing Editor at Times Network, discussing the overall impact of pandemic and how to tackle health emergencies and how India has emerged as a leader in healthcare space. Listen in.
You mentioned about sharing data, sharing information. Now, we did see during pandemic also, in the initial phase, unfortunately, not all countries were on the same page. Countries like China were probably not sharing enough data. And there was a lot of hue and cry about the whole transparency issue between even superpowers like, let's say, US and China and so on and so forth. So how do we ensure that there is enough transparency and information is available? Because a global crisis requires global cooperation.
Absolutely, absolutely. And these pathogens, viruses, they don't know borders.
Exactly.
They go across the world, across the border. We are living in a global world, which is, people are traveling all the time from one place to another, and they take the virus and pathogens with them. So it's a global issue, global challenge that we need to tackle at the global level. As you know, one of the themes for our annual meeting here in Davos this week is building trust.
Correct.
I think building trust is critical in this scenario as well. We want to make sure that we build trust among people, among governments, so that we again start to work together. That's a big challenge. And during COVID, I think there was further erosion of trust. As you rightly said, people didn't share data, nations didn't share data, organizations didn't share data as much as they should have. So we want to make sure that we can avoid that next time around, so that we can have a faster response.
Right.
And that's what World Economic Forum, my center, is working on, working with various stakeholders from G20 to G7. I was part of the health ministers meeting in India for G20, and this was a topic of discussion, on pandemic preparedness side. We are working with G7 governments as well on the same side, that how do we make sure that we start to build a system where data and information is shared as quickly as possible.
Welcome back, and you're watching Market Fatafat on ET now. Let's keep it going with all the stocks that are buzzing in trade. And Swati, the next one that you've picked out for us is BPCL. At the current levels, BPC, would you say it's still a good buy?
We really do it very well on the technical front. The stock is sitting in the high tops, high bottom formation. Also, the interesting fact that it is well placed above all the important moving averages, say the 50, 100 and 200 DMA. In this particular fall, we have seen the stock manages to take a support of 50 DMA, which comes to around 445. From there onwards, we have seen a smart pullback rally towards 480. This kind of a rally and the setup is really positive on the technical front. I believe it has a potential to reach up to 520 to 540 levels. So those who are having any long positions, they can hold on as long as it holds the support of the 460. So 460 will act as a crucial support level for this particular stock, and we're looking for a target of 540 levels on my side.
Okay, let's move on and talk about stock number 12 for today, JK Tyre. That one is in focus after DAM Capital has maintained a buy on JK Tyre, but they've hiked the target price to 615 rupees per share from previous 415 rupees per share. What they're saying is that the new margin territory and debt reduction is to drive valuation. Sharp correction in crude prices is improving replacement demand, and stable pricing would further expand margins of the company. Now, they expect earnings upgrade and valuation expansion from the current levels for JK Tyres, and that is expected to continue in the near to mid-term as well. So that is why they're maintaining their buy and hike the target price to 615 rupees per share. Significant upside from the current levels of 443. That's why the stock is up and away today with gains of 3.6%.
Alright, next up, let's talk about Poonawalla FinCorp, and that particular counter is actually buzzing in trade on back of its quarterly earnings. If you look at the numbers, a good show coming in for Poonawalla FinCorp, where the NII has seen an uptick of about 64% on a year-on-year basis, coming in at around 491 crore rupees. The PAT has also seen an uptick of about 45%, coming in at around 265 crore rupees. Remember that this quarter they've seen the highest ever quarterly disbursement as well as PAT, the lowest gross NPA as well as the net NPA levels. In fact, we spoke to the management as well on their earnings and what they see when it goes the year is as we are ending the year, that is FY24. What's their projections coming in? Listen in.
Yeah, very important here to note that it is very easy to go, but at the same time easy to lend, but you need to collect the money also. So we are not into collection business. From day one we are into risk business. So if you see the breakup of GNPA is 1.33, net NPA is 0.70. This is because of the legacy. Our new book GNPA is 0.42 and net NPA is 0.23. I think we don't expect credit cost guidance we have given between 0.8 to 1.2, and new book is performing well as compared with our expectation. Though somebody can say seasoning is not there, but if you see there is a bureau seasoning at a customer level, there is a business vintage, and we have done this in the past. So we are confident of maintaining net NPA below 1% as per our stated guidance of Management Vision 2025.
Okay, let's move on and talk about the next stock on technicals. That's First Source Solutions Limited. And Swati, this one in the last 1 month has only managed to see an 8% uptick, but before that it's already seen a sharp run up. So do you think that now it's time that one should start booking profits and this is the level that it would stabilize at?
Course, on a larger degree, say on a monthly chart, the stock has given the formation of a rounding bottom, and whenever such kind of a formation happens, really the stock forms a very good support level and it's turn up into the new trend zone as such. I believe that as of now the stock has given the breakout of 61.8%, which is a golden crucial retracement level we are considering it, which comes to around 170 levels. From there onwards, we have seen a very spurt into this particular counter, but I believe it has a more potential to reach up to 240 to 250 levels. So those who are having any long positions, they can hold on as long as the stocks maintains the support of a 190 levels. 190 can be kept as a profit stop loss, and I'm looking for a target of a 240 levels on high side.
Coming in on First Source, Shesha, let's talk about Central Bank of India, and that one reported its earnings earlier today.
Well, yes, the stock in fact is trading in the green with gains of nearly 3%, 2.5% as we speak. Net interest income in fact has seen a decline of about 4% on a year-on-year basis. Net interest margins have also contracted on a sequential basis, and the company says that it is on account of increase in interest payout on deposits. So net interest margins in the quarter gone by stood at 3.33%. which is a decline of about 60 basis points on a sequential basis. But on the flip side, profit after tax has seen a solid jump on a year-on-year basis. Company has reported a profit of about 718 crores versus 453 crores at the same time last year, up about 57% YOY. Asset quality, meanwhile, has also improved. GNPA has come in at 4.5% versus 4.62% on a sequential basis. All in all, the street is excited with the kind of numbers the company has reported, holding up with gains of over 3%.
Okay, let's move on to the next stock. And Swati, you picked out Vascon Engineers for us. In terms of technicals, what is the level that one should keep an eye out on here?
Technically, the stock is really doing very well from the this month itself. The stock has given the returns of almost 23%, and on the monthly chart, the stock has given the formation of the flat pattern, and today it has given the breakout of the same level if you look towards the line chart. As I believe that the setup is really strong, and upside very soon the stock will enter into the 3-digit as well. For a longer term horizon, I am looking for a target of 100 to 120 levels on the high side, and for the short term period at such purpose 98 to 100 levels can be seen. So one can take a long position at the current market price as well, because the stock is trading above all the important moving averages, and downside it has a very good support of around 80 levels. So one can keep a stop loss of 80 and can create a long position for immediate target of 100 rupees to 120 levels on high side.
Alright, moving on, Lisa, let's talk about Dixon Tech, and that particular counter is slumping in trade today. What's the reason?
it's because DRI has conducted a search at its Noida facility, and the search is related to the classification of the raw material it's used for a specific product at the facility. But the company did not disclose what is the product and which raw material is involved. For now, they only mentioned that the impact on the financial, operational and other activity, it cannot be quantified presently, but it won't have any significant impact on the financial operations or any other activities of Dixon Technology. So that is why the stock is trending downwards in today's session.
Okay, that is Dixon Technologies, keeping an eye on that one. But Shoppers Stop, that's another stock that's plunged into today as well. And this is okay. Before we go to Shoppers Stop, actually, Swati, could you talk to us about Subex and what is interesting in terms of charts for Subex?
Subex Limited, as of now, the stock is under the correction phase. We have seen from the last few trading sessions 43 to under 35 levels. But as of now, stock is holding a very good support of 220 DMA. If you look towards on a larger degree on the monthly as such, I believe if you look towards at least 1 year data, the stock is just consolidating within the range of 25 to 35 levels, and it is on the verge of giving the breakout of the same levels on the closing basis. I am preempting the breakout which comes to around 38 levels. Once it manages to cross that level, we will get a huge breakout and the stock will reach up to the 60 to 70 levels on the higher side. So it will be a very good buy call. Current risk reward ratio is also very favorable. So by maintaining a stop loss of 30 rupees, one can go for a long position in this particular counter for immediate target of 50, then 70 levels can be seen on the high side.
Keeping an eye out on those levels for Subex. But let's move on and talk about Shoppers Stop. Like I was mentioning before, this one is surely stumping away in trade today because of its numbers that it came out in Q3. And what we're seeing is the net profits of the company have seen a decline of as much as 41% on a year-on-year basis. Net profits have just come in at around 37 crores. Revenue is a mild uptick there of 8.8%. So what we're seeing is in terms of retail, the shopping spree has not coming despite festive season, wedding season, nothing in terms of a support that is coming for the retail front. Even in terms of the EBITDA margins of the company, that's seen a contraction of around 114 basis points, coming in at 17.6% versus 18.7% last year. So operationally also nothing exciting that has happened, and yes, because of that we're seeing the weakness in the stock as well, down almost 2% as of now.
Alright, so that is Shoppers Stop for you. Moving on, let's talk about MACMA India CE Info Systems. That particular counter is soaring in trade today. Last time I checked, the stock was trading higher by about 5.6% or so, seeing a biggest intraday gain since November 23rd. The company has said on Friday, or that is today, that it's got orders worth about 400 crore rupees, and this order win that they've got is from Hyundai and as well as Kia Cars, original equipment manufacturer business in India. So on back of the order win coming in from global car companies for its services, you can see the stock actually seeing that jump on an intraday basis, taking the stock as high as 5.6% or so. Biggest intraday jump since November 23rd. Now it's given up some of those gains, trading with gains above 1.8%.
Okay, let's on that note actually slip into a very short break. Don't go anywhere. We'll be back with more stocks after this break as well.
Welcome back. You're watching Market Fatafat on ET now, and let's continue with the stocks. And Lisa, coming to you, HCC is the counter that you're going to talk about. Why is this one in the news today?
Right, so HCC, a wholly owned subsidiary and a leading Swiss-based retail firm, that is Tenor AG, they have completed the sale of its stake in the step-down subsidiary Tenor Construction to D. Matthew Bard of around the transaction consideration is around 928 crore. Now, this transaction, it accelerates Tenor's AG transition to a pure real estate development company, which aligns with the group company's vision. And the company also said that Tenor AG will now be looking at expanding its development portfolio with a more ambitious growth plan. So that is why we can see HCC, it was trending higher in early trade, but now it has cooled off some gains, but still trading with a positive bias.
Okay, let's move on to this next stock, and that is 361 WAM. This one is in focus on the back of its numbers as well. And when you look at it in terms of revenues from operations, that's seen a growth of around 25% on a year-on-year basis. Profits, mild growth of 12%. The ARR, AUM, that's seen a growth of around 32% YOY, but a 9% uptick on a sequential basis. But today, the stock is not doing anything exciting after the numbers. Seems like it did not cheer the street much. and as of now the stock is trading at the day's lowest point, down almost 1% in trade.
All right, let's put the focus or the spotlight on Titan, because that particular counter is in focus in today's trading session. You have CLSA that's come up with a note on Titan where they're saying that they have maintained a buy stance with a target price of 4,494 rupees per share. They're saying they're analyzing the pricing power for Tanishq relative to peers, and also Tanishq's making charges scale with the product prices as a percentage of the product price. They're also saying this also demonstrates Tanishq's pricing power, especially at the premium end, and most other large competitors see making charges fall with the rising product prices, which is an indication of the lower pricing power. Tanishq's focus is on design, consumer trust, and customer service allows the brand to charge a significant premium, and this is reflected in the high operating margin as well as returns, is what CLSA had to mention while writing a note on Titan, maintaining a buy stance that the target price is significantly higher than what the current market prices of the company.
Okay, that is on a Titan. But as we count down to the this year's union budget, NS and Murthy, government and public service consulting leader of Deloitte India, shares his expectations. Listen in.
Open networks undeniably are becoming agents of economic growth in India. Once deployed in a scale, helps the MSMEs the most. The shopkeepers on the ground, the retailers on the various villages or network, if they are connected to an open network, the access to the market, the ability for them to reach out to their buyers becomes very easy. And that will create a lot of economic impact on the ground, which is most important for India at this moment, because MSMEs are the new growth engines for us. Look at the second aspect of this, startups. India is the hub for the startups. Entire evolution of DPI, DPGs in India have been driven through the startups, driving more and more solutions on top of the DPIs which have been, or the railroads which have been built by the Indian government. On top of Aadhaar and other DPIs, so many new innovations have come in. Similarly, on the open networks, there will be several such innovations which will come up. Last and the final one, we do all those things, but the most important is grassroots level person. Now the buyer who's on the center of all the entire revolution, he's now getting choices. He's not limited to connecting one-to-one and depending on certain processes. So open networks gives the entire control and power to the buyer to make sure that he selects and he gets the right product and solutions, or right services for that matter. I strongly believe open networks and investment in the open networks will actually be a long-term impact on making this country a much more economically and sustainable environment.
All right, on that note, thank you so much, Lisa, as well as Ashisha, for joining us on this edition of Market Fatafat. And as we wind down this edition of Market Fatafat, the World Economic Forum 2024 has reached its culmination, and Times Network is bringing you an exclusive interview with Dr. Shyam Bisen, who is the head of Center for Health and member of the Executive Committee, World Economic Forum, with Mihir Bhatt, who is the managing editor at Times Network, discussing the overall impact of the pandemic and how to tackle health emergencies, and how India, in fact, has emerged as a leader in the healthcare space.
I want to start with pandemic, not because it is sensational, but it is something which is still fresh in everybody's memory. And you know, when a warning from WHO and many other places comes that the next pandemic, whenever it happens, and let's call it disease X, could be 20 times more severe than COVID. It is scary.
Yes, it is scary, but the point here is not to scare people, not to do fear mongering. It's more about how do we prepare for the next pandemic. As you said, we had a session on disease X yesterday that was attended by the Director General of WHO, Dr. Tedros, by the Health Minister of Brazil, Ms. Nicia Trinidad Lima, as well as several CEOs. And that session was very popular, was trending on social media quite a bit, for right reasons, for the right reasons, in the sense that everybody wants to know where are we with regard to the next pandemic preparedness? Disease X is nothing but a term coined by WHO a few years ago to talk about unknown pathogens, unknown viruses. So if there is an unknown pathogen, we don't know much about it. But then how do we prepare for that? How do we make sure that the health systems are there, they are stronger? We have a lot of learnings from COVID, what happened there, not just in low and middle income countries, not just in India and other countries, but also even in the US.